But now let's bring in someone who actually knows what happens with the markets and why it does what it does. And I'm talking about Scott Bauer, CEO of Prosper Trading Academy. Scott, welcome to the show. I know we're going to come up here in a minute or two with some numbers here with housing starts and permits. But before we do here, we get that up there, just curious on your overall view so far of this earnings lift that seems to be in the marketplace.
You know what? Earnings expectations overall were muted a little bit compared to where we've been over the last probably 6 to 12 months. So what we've seen so far has been good. But what has impressed me so far, JB, is not so much the top line numbers, but it's the bottom line numbers. That's really the impressive number, because that top line number, it's going to be strong across the board. But with everything we've heard about inflation, higher prices, supply chain disruptions, that's what really impacts that bottom line. And that's where we could see some really negative surprises, which we have not seen yet. So that's been a real good thing.
Yeah, interesting. You heard it right off the bat. Everybody, even on the P&G and J&J, both of them talked about higher input costs from the commodity standpoint, transportation cost. We seem to be hearing that as a growing trend for 2022. So it'll be interesting to see as that continues to build there. Now, as I'm looking here, it looks as though the numbers have come in. Again, not a big numbers that are going to change the markets, let's say, or move them one way or the other. But on both the housing permits and the start side, a bit of a miss than what we had. You know, the expectations are 1.68 coming in at 1.589 on the building permits, and on the housing starts, again, maybe a little bit more significant of a miss. But again, doesn't really seem to be rattling the markets.
No, that's not going to impact the market right now, but that is a trend that we need to watch. Obviously, with everything going on from higher rates now to higher commodity prices, we do need to watch that trend to see if that continues in the housing sector, because that has been, one of the leaders of this market, quite frankly, for the last 18 months or so.
Yeah, so it'll be interesting as we keep watching them move along the way. Again, I'm kind of curious to see what happens. We get some more data, obviously, tomorrow with MBA applications and so forth and mortgage apps, and I'll be curious to see if that continued trends. But again, it's funny. You come out by where I live, there it is on the big screen here. You're seeing the starts coming in and building. They're still moving off of my streets out in the suburbs, so it'll be interesting to see.
You and me both.
Yeah, where does this start to trend to go? But I think it's an important point that you raised there, which is watch the trend, right? This trend, it may not move the markets as we speak right now, but that trend will have an impact at some point. And the question is when will it have an impact? We have a little bit of a sell-off in the market now, nothing of any substance. We're still up in double digits, but I still think it's interesting to see that's had just a little bit of another housing disappointment. It'll be interesting as we eventually get to those earnings cycles where it goes. But let me turn my attention a little bit away from there. And the reason I want to turn attention is to the dollar. I know we've talked about the dollar a lot different ways, but it really seems as though where the dollar is going has a bit of an impact to the rest of the market. Weakness in the dollar seems to breed positivity in the indices. Where or what's your thought as you're looking at the dollar at pretty significant highs here? I mean, it's not at where it was before at the 95, but we're still talking at elevated 93 levels, almost back up to 94.
Yeah, right now, we're seeing the dollar come off a little bit, but it has come down to the area, JB, around 93 and a half, which was significant resistance for the longest time. That 93 and a half area probably hit 4 or 5 times over the last 12 to 18 months and was significant resistance. And now that it broke through that almost up to 95 and now settling back down there, that should hold from a technical standpoint as support. So I see this little bit of dollar weakness here, perhaps as a buying opportunity, quite frankly.
It's interesting because one of the things I've been looking at is watching sort of the impacts of the inverse relationships. We talked early in the show about strong gold, weak dollar, or vice versa. The other one that kind of sticks out to me is sort of the international markets. Obviously, we had the GDP miss in China. I'm looking at the UK, elevated cases of COVID, questions on supply chain, a lot of concerns there coming into play. That weakness that's kind of been in some of those international currencies also, to me, seems to be an opportunity just to sort of indirectly start to lift the dollar up as well. Do you see those international weaknesses and supply chain issues that seem to be, much more at front page news here in the U.S., starting to impact internationally and then start to have that opportunity to kind of push the dollar higher as well?
No doubt about it. But what we are seeing a little bit of pressure, push and pull, if you will, is other currencies, in other parts of the world, you look at New Zealand and Australia, which obviously we watch real closely, those dollars, and even in Europe, they seem to be much more intent on rate hikes sooner than we may have them. So I think you have a little pressure there as well, which is hurting the dollar. But then you get the economic data like you were just talking about, which should support the dollar. So it's a very interesting dynamic. It's a very interesting trade right now. But again, I think the key number here for the dollar really is that 93.5 level. And I think it'll hold, and I think it gets stronger from here.
No, absolutely. It's a great point about the Australian New Zealand dollars. People sometimes forget those overnight currencies really have a chance to move and have an impact.
Yep.
Want to shift my attention a little bit to the Treasury side. And the reason why is I also think this is an interesting impact. We've seen sort of the front end, really the 2-year, have a dramatic move up, right? That sort of 210 spread continues to tighten. But the long end sort of seems to be out. As you're looking at that right now and you're looking at that marketplace, do you see that the interest rate, does the 10 have to get up past 1.6 in there to help push the dollar? Or is the 2 able to help the dollar as well?
Now, the focus had been on the 10 for so long, and now that we're seeing that tightening, if you will, of that curve, that's where the focus is. I do think that the 2-year, if that accelerates even more, if that spread really starts to tighten more, that will be a huge catalyst for the dollar. I really do. And I think that the 10-year, though, JB, the market overall, I believe, will be content with a 10-year as high as 170, quite frankly. I think that is still somewhat bullish for the marketplace. We don't want to see this 210 tighten much more from where it is right now. I think that would put some pressure, but there could be some real good tailwinds to the dollar if we do see the 2 start to increase a little bit here.
So last area before I let you go here has to go to crude. I mean, this to me is one of the stories because I do think eventually this has this inflationary impact if it's not there already. We hit an intraday weekly high yesterday of 83.18. It couldn't keep it. It sold back off. Whether that was the industrial output here in the U.S. as factory data came in a little bit weaker than expected or whatever you want to put it, we did fall below 82, but now we're back up here again at that 82.20 range. When you're looking at crude, what sticks out to you at this level?
It's very range bound now. Range bound on the higher end of a range, if you will, but very range bound. And I have actually, and I've had these conversations with Ben, I have tried to short this at every opportunity I can on these run-ups with very, very quick stops, because even though the overall macro environment is for higher commodity prices, is for higher crude prices, I really think we're getting to that saturation point, if you will. I think we are starting to put in some significant tops here. And honestly, I know I'm not in the majority of the camp here, JB. I would not be surprised to see crude sub 80 here pretty quickly.
So I guess my last one here for you then is the one area that I've been surprised at is the shale production really has not come in at all.
Nope.
And I keep looking for it, and I know that if you go back 2 years, you had where OPEC flooded the market to really kind of wash out some of those shale producers. I guess my question as you look at it here is, do we need the shale producers to come in, or are these sort of transportation and logistic issues one of those things where you can pump all you want, but then you're going to run into storage problems because you can't get it from basically the ground to the refineries, from the refineries to the distribution mechanisms, whether that's, gasoline stores or wherever it is?
It's a real vicious cycle right now, and one really feeds to the other. The bottom line is, though, as you said, the shale producers have not come back. And you would think at prices of $70, $80 a barrel that they would be rushing back, but they're not, because they're very intent on appeasing the shareholders at this point. They were burned pretty badly, 18, 24 months ago. And at this point, they want to make sure that the shareholders are getting full value at this point. So there's a lot of pressure on them to come back and get to drilling. It's not going to happen anytime soon.
So last quick one before I let you go. Big week of earnings. What one is on your radar? Are you taking it day by day? Are you going from Tesla, United, and then moving your way to Snap and the rest? Or is there one that's got your attention that you really want to have your eyeballs on?
So in terms of the overall market direction, I don't think there's one report this week that is going to give us any overall direction. Whether Tesla beats handily or misses, or quite frankly, if Netflix beats handily or misses, that to me is not going to impact the market. I think when we start to get into next week, when we see the Microsofts, the Apples, that's where we get a big market direction. But I will be really focused on Tesla for sure, because I honestly, I really think that it's flirting with $1,000 price. I think that's going to be like a magnet here.
Awesome. Very interesting analysis. Scott, as always, you hit it across the board, all over the place, live data. You talk about the dollar. You talk about crude. You talk about Tesla, everything. I appreciate you coming on the show, as always. Fantastic analysis.
Thank you, JB.
Everyone, that's Scott Bauer, CEO of Prosper Trader Academy, joining us. We're going to take a quick break.